In this video, we will be looking at the importance and facts to note while trading the double bottom and any other chart patterns. This is a daily market chat of the Australian dollar and United States dollar. How frequent do you trade the double bottom, and how profitable has it been for you? At the end of this video, you should be able to trade this chart pattern better, identify entry points, and why you haven't gotten the best out of it. This pattern is easy to identify in the market, and you will always come across it on your market charts. This pattern is a trend reversal pattern, so always look out for it in a trend. Sometimes in double bottom, when you trade, the market prices don't go the way you predicted. Well, in trading you are never going to be right all the time, but there are actually ways you can increase your chances of success. When you zoom out, you will notice that market prices have been going down until the pattern appeared. Here's a peek at the previous market trend. Then the market trended down. Here, the market made a double bottom pattern. When you put a box below the pattern, you will notice the pattern made a support here, which is actually good for a double bottom. Prices reversed on a horizontal support, first and second bottom. What actually happens in the double bottom pattern? This pattern relies on breakout. The rule of this pattern is, once a breakout happens on the neckline, prices are likely to continue moving up. That is to say, when a candlestick closes above the neckline, traders take their shot and go long. In this market chart, your profit target should be at this place because the market made a reversal at this point. A pullback happened here, which simply means prices are likely to reverse at this level if market prices reaches there. And this happened in this market chart. Also, the height of the double bottom is a measurement of profit targets, especially when it comes to first profits target. Next, we will look at the neckline. A line is drawn to outline the neckline. Always know the extent of your profit target. By watching the pullbacks that happened before the pattern, the line becomes a resistance line. So that explains why a breakout will trigger a buying opportunity. The bullish candle here broke the neckline and closed above it. Some of the bulls who observed this pattern and the price's movement will enter a long position here. Buyers at this point will have their stop loss below the support level. The profit target is the pullback here. Or you measure the height of the pattern. From the support level to the neckline, prices are likely to react to this level. Also, you can move your stop loss level up below this level because of the price rejection here. Next, we will look at another trading technique for a better risk to reward ratio. Prices pulled back to this area and formed an engulfing pattern. Most traders who wait for pullbacks after breakouts took their shot here. This is to have a better entry point in the market, but sometimes prices won't move as you predicted. Let's take a look at how the position looked. The stop loss level will be below the low of the pattern, and the take profit wouldn't be above this level. Remember, for you to get the best out of the market, your profit target should be realizable. This is not a good risk to reward ratio. Inasmuch as this looked like a good trade to execute, always compare what you're willing to risk and what you're aiming for. For the traders that executed their trade here and placed their stop loss level below the pattern, they will lose their position. This is because prices moves down below the stop loss level. Surprisingly, prices reversed and made for the predicted target level. What did this teach you? The market doesn't care about your position, so having the best risk management rule will ensure you stay on top in the long run. Never risk your account unnecessarily for just a trade. Remember, the market will always present opportunities to trade. Be patient and smart. When you make your entry position using a lower time frame, it will give you a better chance to profit from the market. When you do this, watch out for buying opportunities at the close of the pattern, and this means you wouldn't have executed the trade here.